What's going on, family? Let's talk about leaps and swing trades. These are options trading strategies where we're looking for the stock that we're trading to go to the upside with an options contract. So, in this video, what I want to do is go over this particular strategy, especially for long-term investors or people that are beginning, or someone that says, hey, I do not want to monitor this particular trade day in, day out. I don't have the time for day trading. I even don't have the patience or the risk to do that. So, this trading strategy for options, swing trades, and also leap options are a really good strategy for people that want to get a little bit more bang for their buck with their trading and their portfolios, and also be able to lower that risk tolerance. All right. So welcome to the channel. Hopefully you are doing absolutely amazing. It's good to see some of you that have been here with me before. My name is Dr. B. I'm a holistic life business coach strategist for entrepreneurs and thought leaders, and also an options trader. I do trade futures as well. Thank you so much for the support on the videos and also the videos that you have been learning from. I haven't done a training video in a while, so I thought I would put this out. If you have any more videos that you would like me to cover down below, please let me know. A lot of you have come from some of the Robinhood videos, so I haven't shown Robinhood in a while, and I've got my Robinhood legend up here. So I will be using that today along with my normal kind of scouting platform. I still use Webull. So if you're a Webull or Robinhood person, or even if you're old school in the Thinkorswim platform, we can still work together and find you these particular trades. All right. Without further ado, let's jump into it. And also, while we're going through this, if you like it, please hit the like button, hit the subscribe button. A lot of you aren't subscribed yet. And also that share button to share it out with any friends, family, or anyone that you believe might benefit from this video. All right. I'll try to adhere to beginners, intermediates, and advanced on this video, and also some talking points. So get your notepad out. Let's talk about it. And I will be going over on the chart. So if you're still not a chart person, I understand. Do not be too intimidated. I do have a video that will pop up probably after this video that talks about how to read a stock chart. And you can look at that video after this one and try to figure out how to look at these green and red candles going back and forth. All right. So let's talk about the differences in the definitions first. Okay. So let's start from the beginning. If you haven't watched my intro to options trading, right, an option contract is a contract that includes 100 shares of said stock. Okay. That's basic number one. An option contract includes 100 shares of said stock that you are trading. Okay. So with that being said, Brian, do I own this? You own it for a period of time. That's why there's expirations on the particular options contract. That's going to be very important as we talk about this leaps and swings, because you can see here the first characteristic of a leap option and a swing trade option is that the length that you put on the expiration when you buy that particular contract. Okay. A lot of folks in options trading are very familiar with the short expiration dates and the quick trades and making, X amount of percent with 0-day expirations or weekly expirations. Okay. All the differences, and this is a common question, is, Brian, is there like a different contract? No, like you don't have to go into a different space or place. I'll show you in just a second on Robinhood. You just simply pick a longer contract. So there isn't like a button that says swing trade or swing contract or leap option contract. It's not a difference. Okay. So we want to make sure that that is clarified first, that when you go into your options chain, okay, to choose an options contract that you like, right, all you're looking at is the expiration date. That's what turns it in to that particular type of trade. So day trading, there's 4 different types of trades. For those that haven't seen my video on that, really quick, there's a scalp, there's a day trade, there's a swing, and there are leaps. Okay. A scalp is in and out within, I would say, it could be 1 minute for some scalpers. It could be 5 minutes, but typically I'd say anywhere underneath, 15 to 30 minutes. And some might say even quicker than that, but 15 minutes to 30 minutes is typically considered somewhat of a scalp. A day trade, I would say that that person is going to be holding that trade throughout the day. So a scalp and a day trade are still the same thing. It's just the length of time that you're holding that particular trade. A day trader might hold that trade a little bit longer between, just say 30 to maybe an hour or full day. Okay. And they want to enter the trade at the beginning of the market open at 9:30 Eastern. And by the end of the market close, they should be out of that trade. A swing trade is simply you're carrying that options trade over to the next day. Okay, so swing, this is where it gets a little bit tricky for those that are looking for definitions, is that if I choose to turn a day trade and hold it longer, now it's turned into a swing trade. So you're swinging it into that next day. But in this case, we want to talk about trades that are 1 month to 3 months plus. Okay. And a leap option is an expiration that expires 12 months. Okay. Plus. All right. So you can see if I go back up to my chart, there's a time horizon, 1 to 3 years, swing trade options, days to weeks, sometimes months. Okay. So that's where that expiration kind of comes in. That time horizon is you're looking for that trade to play out over the course of that week, that month, maybe even takes a full quarter to play out. Okay. That's still technically a swing trade. Okay. Now let's go into the strike price. Okay. And while I'm going through this, I want to make sure I go back to my Robinhood so you can see on my options chain here. Okay. Do you see the, let's see if I can just pull out the full options chain. Okay. Same thing. Okay. Let me just drag it up here just a little bit. So it's a little bit more. So if you haven't downloaded the Robinhood Legend, I'd highly recommend it. If you're still in the old school Robinhood and you're trading on your phone, that's cool as well. It looks the same. So down here at the very bottom, I have my options chain. Okay. And I'm using this particular example because this is this current swing trade that we're looking at that I've been monitoring over the course of the last couple of months into the new year. Healthcare, more specifically, this healthcare insurance company based out of St. Louis. The doctorate that I do have is real. I'm a pharmacist by trade. So I do have a little familiarity with the healthcare space. So I was very familiar with Centene. And when it dropped, I was very intrigued by this drop along with UNH and some others. Okay. But this one's very affordable and it could be a nice swing or leap option for people just getting started. Okay. So let's go into the expiration dates. Okay. So if I see something, the first thing I want to do is I want to analyze it on a chart. So I said I was going to stay in Robinhood. Let's go into CNC. Okay. So now's the time to take notes of how to identify a leap option trade. Okay. So the first thing you want to do is you want to get your chart up and ready. Okay, let me get it there. Let me turn off some of these indicators right now. Okay. And do you see that CNC? I have my dates down below, right? Do you see that June 2020, 2012, 2013, 2014? Okay, you can see the dates down below. Okay, right there, the years as well. Now, if I go to a monthly chart, okay, let me see. Let's go to a month. Let's add 1 month on there. Okay, so when I click on a monthly chart, that's even a little bit better. So the first thing you want to do is you want to get your chart up of a stock that you're looking at that has dropped. Now, I'll have a caveat and some examples of things that you're like, well, Brian, do I buy this one? And this is on a dip. Some companies are not proven to be true yet. Some companies, you have to do a little bit more fundamental analysis if that company is going out of business, bankruptcy, whatever, but solid companies. That's what I'm talking about. Solid companies, okay, in solid sectors, healthcare sectors. I'm not talking about biotech, right? Speculative sometimes, right? And therapeutics and things of that nature. They're trying to all cure cancer, which is not a bad thing, but that's still speculative. Centene. I'm familiar with Centene. It's a healthcare insurance company based out of St. Louis. They're profitable, still a solid company. Okay. If we look here on the chart, for those that still aren't familiar with charts, I like to, talk as a beginner here. I've got valleys and I've got mountaintops or peaks. Okay. Peaks are resistance. When you see a valley like that that's curling, That is support. So we have support and we have resistance. Okay. And I'm on a monthly chart. So that means each candlestick represents what happened with that stock in that month. So if I go back from here, here's where we are now, and go back left, I can simply say what happened to Centene last time we were at these levels of around $30, $25 to $30. Okay. And I can mark it on the chart. So if I grab a horizontal ray here, mark it and drag it down. Last time Centene was at $25 to $26. It held that support. So buyers are present there, picking it up. And each time, what did it do? Right? It went to where? 41. Next time ran to about 38. And then finally, this turned into, okay, what? A bull flag. Okay. Now, again, this is a beginner video, so I'm not going into too many formations, but there's a run up, there's a flag, and it breaks out of that flag, and then we're running to new highs. This is when it broke out and went to roughly 75 in 2018, pulled back again, another bull flag, and went higher. All right. So what do you think I'm looking at again? Now, does that mean that it's going to run all the way back up to the highs? No, you take it step by step. It's staircasing and moving its way back up. So look what's happening now on Centene. So I got very interested in what? A leap option. Okay. This means that I think there's a no-brainer that CNC or Centene can recover minimally back to this $60 plus level. So that means you're buying it at 30 or underneath 30, running it to 60. That is what we call a double up. Okay. You buy shares at $30 and you can sell it at $60. Or you can expedite that with these leap options. Okay. Remember, every contract that you buy includes 100 shares. So that means you're getting more value on the leap option along with shares. So you can buy shares, but also grab a leap option contract. Okay. So I'm interested. It's on a monthly. And then when I go to my weekly, it's also showing buyers present. All right. Buyers present. It's doing the same thing, bouncing and going higher. Okay. Now, how do you know that you just enter blindly? No, we don't enter blindly. I first get interested. Okay. I get interested. Second, I watch that level to see how it reacts, because guess what? Centene could have easily broken down like that and came lower, right? So I want to watch the area to see if buyers step up. And once they step up, right, on higher time frames, on leap options, I'm looking at weeklies, monthlies, and even I'm looking at how the days are playing out around that area. Okay. So I'm staying in these time frames. Once I get confirmation that that weekly is holding, all right, that weekly, and I do see buyers stepping up, I go ahead and get interested and start signaling or getting interested for myself, okay, that leap options are now valid, okay? And we've got targets that we want to take it back to, okay? If I go left, there's some targets, previous support becomes resistance. So that's my first target, would be right there. Okay. At roughly around $45. Okay. Why? Because last time it ran to around 40. So I want to mark that as well. So $40 to $41. That's my first target. So should run and hold right here and then pick back up and run to about 40, 41. Right. If we get above that level, right, like that, then my next target is going to be at these highs and right back to roughly 55 to 60. Okay. So that's a simple way. And I'm going to go into some indicators that I also use, MACD, RSI, right? But I wanted to start with just a simple support and resistance on a monthly level. Okay. Give me a comment down below or a like if this is making sense thus far and this is helping out. Okay. So repeating again, I want to start on a monthly time frame. Okay. And you're like, Brian, you didn't choose the option contract. How do we choose which one we do? I'll get to that in just a second. First, you have to analyze the chart to see if you're interested. Once I see it reacting, right, and I see it's holding on a weekly or a monthly level, and I like the support, it's doing the same thing as last time, then I go into my options chain, okay, right here, and I'm like, I like it. And I'm going to go a year out. So right now, at the time of this recording, it is September 12th, 2025. And I want to go ideally out to either, you could look at September 26th, September of 2026. So that'd be a full year. Or you can just go straight to January 2027. Okay. Either one of those is fine. Okay. Now I've got calls, right? So we're wanting to look at calls because we're wanting the stock to go up. Call, pick up the phone, puts, put down the phone. Okay. So calls. And if I go over here, if I've already got my targets on where it's headed to, it helps me pick a better contract because I've got my strike prices, right, in the middle right there. Okay. So if I've already analyzed, hey, it's going to 40, I can look at this and say, I know it's going to 40 within, a year plus. Okay. Because I've already analyzed it. So you can go in here and pick this $560. That's how much it would cost, $560, right? You're like, Brian, that's kind of like a lot. In retrospect, it's not, because I'll show you how much that contract could be over the course of a year plus time. Okay. So this is good for a long-term investor. It's good even for a beginner. It's good for someone who has, just say $500 sitting in a savings account and you're wanting to like make it work for you a little bit more, right? With very low risk. The reason why people don't know about this or don't do it is simply because they don't know how the stock market works. So they think that they're going to lose the $560 or it's going to go to zero, but they don't understand that a leap option a year out is very, very safe. That's what the politicians do. That's what you see Nancy Pelosi doing, is they're buying these leap options that are a year out. And that's how they're double, quadrupling their money so quickly. Right. So this leap option here, $40 is $560. Now, Brian, what if I don't have $560 and I think it's going to 50, right? Well, that 50 is 330, right? So we've analyzed it that it can go to 40, right? And then 50. Well, Brian, what if I think it's, can go to all the way to like 60, right? Just recover the whole drop that we had, right, on CNC, right, from earnings. The whole drop. Mind you, they had decent earnings. This drop was their earnings coming down. And then this is what we call, I'm not going to get too technical, but this is what we call a very low volume drop. Okay. Typically a straight down drop like that, once the stock picks up, it typically recovers the whole move and it looks roughly the same on the other side if you have a solid company, right? So that's roughly about $55 to $60. So that means that someone could come into here and select the January 15th, 2027, and come in here and select anywhere between the 40, 50, or $60 strike price. All right. Even the 55 is okay. Right. So I will show you on Webull. Robinhood doesn't really allow you to do it. But I can show you how much that contract will be. Go into options, do the same thing, January, and I'll go into just say the $40 chart, and it pulls up a chart of how much that contract will be. Right. In Robinhood, you can do simulated returns, right? So if I go out to the daily, maybe I'll show them. Yeah, here we go. There's the gap right there, right? That's the gap that we just saw, the big drop, right, on CNC. Okay, that's the big drop right there. Now, if this starts to fill all the way back up, let me show you. The contract price is over to the right-hand side. So if that starts recovering, it's $540 now. There's $1,700, there's 2,000, there's 2,100, and just say something crazy happens and it goes higher and recovers the whole move within a year. Well, that's, 2,600. So you've just turned 500 bucks that was going to sit in your savings account earning, you know, 4%, 5% if you got a CD plus whatever. And you've turned that 500 bucks into 2,000, right? With an option leap contract, an expiration that's a year plus out. Does that make some sense for everybody? Does that help? So that is how you analyze going from point A, monthly chart, identifying a support level, reacting to that support level, seeing if it's holding, right, with the candles. And you can get interested in saying, cool, I like it. I'm going to put the contract safely a year out. Brian, you said safely. How is that safe? Because buying time is a safer contract. That's why they cost a little bit more. So you're buying safety going further out on your contract. Okay. You could choose any of these, right? It could happen by, January of this year, right? It could go to 40 by January of this year, which I personally think it will. It's already at 33. I think it can go to 40. It just moved $10 within a week. It was at 25 and then went to 35. Okay. So you think about another $5 move that can easily happen on Centene in the next year, right? All you're doing is, well, Brian, why don't I pay something cheaper here, right? At $40 for January. You could buy this one and you can also buy a further one, right? And that comes to my point of a swing trade versus a leap option. So this January 2026 is about 4 months away, right? You could look at this $40 for January 2026. You could buy that one, right? But what if it goes crazy, right? What if Centene recovers this whole move all the way back up to 70 plus, but you've run out of time, right? That is where you buy the time and you can hold that contract longer and take profit whenever you want. Okay. So another question that comes up typically is, do I have to sell it? Do I have to wait till the contract expires to sell it? No. Once you're in profit, you can sell whenever you want. But the more time you have on your contract, you can hold it longer, right? The closer it gets to expiration date, it starts to devalue because you have to exit it. It doesn't automatically exit for you. It doesn't automatically sell it for you on expiration day. You have to say sell and take your profits. So you can do that anytime you want during that period of time that you're holding that contract. But the longer you have out, the safer it is. Okay. So that is a leap option correlated with the same thing with a swing trade. Okay. Now let's dive a little bit deeper and go into some other indicators that I use that can help us out. Okay. Identify a good leap option. Another one would be the RSI, the relative strength index. So if you're on Robinhood or if you're on Webull or another platform, on your charting platform, if you're on TradingView, that's cool. All right, I want to go into my indicators and I want to go into relative strength index. Okay. Click. Okay. Now it should show me the RSI down here and I can raise, let me see. Come on. Let me see if it'll show it on a weekly time frame. Showing it down here. All right, I'm going to go onto my Webull and I'll show you what it looks like. Okay. So here's the RSI. Okay. RSI. It's an indicator that you can turn on and off. Okay. So I keep it at the bottom of my chart and I want you to see, move my face over here, zoom out, same chart. If you're on Robinhood or another platform, same thing, but keep this video moving along. I have to figure out why it's not showing up on Robinhood. Maybe I'm moving something around wrong. When you're at 30, That is called an oversold territory. So you see this zone here between 30 and 70. This indicator correlates with the chart. Okay. So the RSI is an indicator that allows us to see when a stock is overbought, meaning, hey, it should pull back pretty soon, or it's oversold. Okay. And it's a buying opportunity if it's a solid company. Do you see that it gets in this caution zone and I'm on a monthly time frame? So we are oversold in a monthly time frame. That is another indication that this is a time to buy this stock, and it holds for another year, 2 years, 3 years, 4 years plus, whatever, for share buying. So this is also a good share buying opportunity, and you can include leap options with that. Okay. So a lot of people just buy shares, right? When they also could be buying a leap option as well. So you want to do both of those things. Okay. A weekly, it's also oversold on a weekly. Okay. It's in this caution zone. I'm going to go back to my left and I want you to see what happened last time we got in an oversold weekly level at 30. What happened right here? Chart went from 26 to 70. What happened right here? Chart went from 46 to 76. What happened right here? Chart went from 60 back to 80. Okay. So you can use this RSI to your advantage to say it's oversold. It should recover, especially if it's seriously oversold down here. It's time to recover. Okay. I'll even check in on a daily. Okay. And you see the daily, it popped already. Okay. So that's my first indication. Is one indication pop, consolidation, bull flag. Right there. Right there. I'm getting a little bit more technical, so I apologize for my beginners. You see pop, bull flag, pop. And then next time it pulls back, this is the time. This is the time. Pulls back like that. Right? Holding 30 to 31. And we should see something like that pretty soon. Okay. Very similar to UNH. Okay. Very similar to UNH. UNH was oversold on a weekly, oversold on a monthly. And there's the time to buy right there. You can also buy right there. There's a little recovery, pop. Okay. So is everybody getting it now? The RSI. Okay. So the first thing we did, we analyzed, let's go back to CNC. Okay. We analyzed the support and resistance on a monthly. So I didn't even pull up indicators yet. Support and resistance. Last time it was at 25.26, went up 25.26 again, and it should go up. This is a trade idea. If you're wondering what this thing is here, I can put a trade idea up, long position. It's just the idea. So it sits there. So I have a visual of what I want that trade to start looking like over the next year right there. So it should pretty much follow that path. Okay. And it's following it to the T. So I want to show you exactly inside of our community in our Discord, okay, exactly how this has played out. So I've got my shares and leaps channel, okay, CNC, and I want to show you when we presented this to the community as an opportunity. Back in July, okay, back in July, I said in the healthcare space, I have a lot of familiarity with this company. Overreaction drop. I think it's a steal around $30. And there is the chart. Okay. It's approaching. You see, it hasn't even gotten to there. I'm already drawing out the idea because it's approaching that level. Okay. Now we're monitoring it. I'm saying, everybody be ready. And then about 4 to 5 days later, this was on the 2nd of this year. And then about 5 days later on the 9th, I started watching it. I start seeing it curl. Right. I said, now is the time to pick up some shares and leaps, and we will add to it if we get even more confirmation. Okay. So I give some ideas right there. Everyone's asking, right? They missed on earnings, but stock is up, down, cool. It's a steal, risk to reward looks good. Still monitoring it. Here it is curling up again off of 25. So you see there, it went a little bit further, right? There's the first pickup right there. And then it decided to go a little bit further. And now it's really starting to pick up at 25. And that's where I really liked it, right? Locked and loaded on this one for David. Cool. You're welcome to grab up some shares with a target of 35 and 40 in the short term. Okay. It's that time. There it is. More confirming. Okay. So I'm giving the whole trade idea here, but you don't have to be in a community to do this. You don't have to. I'm just providing as an easier opportunity, as other people do when they have communities, is that you don't have to do the research fully, because I'm looking at these things day in and day out. I can analyze them very quickly. I have notifications when things get, oversold or overbought. Right. So I'm just making it easier for my community so they don't have to, find these things or look for them. Right. And that is the benefit of being in some type of community and just having support, even if you're advanced or intermediate. And I think a lot of communities sometimes just push the day trading, right? But you can be in a community or, be in a support group or whatever and just say, hey, I'm advanced, but I don't want to have to do all the research. I just want to be presented the ideas. I know what's going on. And then cool, I can buy the shares instead of having a day trade. So we do have a lot of people in our community that look at our swing trade channel and our shares and leaps channel a little bit more. I presented hymns right here. Okay. There's an idea right there. And then we've got some more that are on the horizon. So I've got all these organized here. Lyft. We provided Lyft a while back. Hood was another one that we were in for a while back in 2023. We did some leaps on those. There's right there. I loved it right there on the 23rd of March. And there's the chart. I'm starting to like it. It also became profitable, right? And there's the first pop right there. So you're seeing that this isn't like, late to the game. It's like I'm building these ideas, over time when they start presenting themselves. I think, what is it? Hood was one of the biggest ones that we presented a while back. Let me see. Just kind of want to show this just to see how the idea builds. It's not for cloud or anything like that. It's just to show you how long we were building that idea on Hood all the way back. I think it was 2020. Yeah, here we go. So you see, I was in Hood Leaps. This was we're looking at the 20 call. So there we go. We got in right there. I want to see some potential, start building, got in a couple of leaps for the 20 call. This was when Hood was underneath $20. All right. And it started building. There it is. Cool. We're off to the races. And then we're just monitoring it. Great. Ionic as well. Another one that was presented to us. Awesome job there on leaps. That one was underneath $6-7. We're talking about Palantir leaps. So these are solid companies that we still are looking at all times for these potential opportunities, but we want to see them coming in on very, very big dip buys. Okay. So I'm going to wrap up this video here because it's getting a little bit long, but I wanted to summarize it as a simple video that you can watch back and say, how do I identify leaps? Step one, right? Identify solid companies that are profitable in certain sectors, whether it's consumer discretionary, a company that you're familiar with, a company that's been around for a while, a company that you're like, I go to their store every day and they're still doing okay, but their stock's down right now, right? You want to look at their financials. You want to look at that company. If it's in the tech space, consumer discretionary, restaurants, healthcare, energy, whatever it is, and say, hey, let me do my due diligence. It might have to be another whole video about fundamental analysis, but here's another one right here. Lululemon approaching the same level, okay, as 2018. Okay, so it's almost doing the same thing. We got DG as well, but I'm not going to go too fast on this, but Lululemon's happening as we speak. So I'm getting interested in it, okay? Around 130 would be awesome because you see it's breaking underneath this 160 level. Last time it got underneath that 160 160 level, it came down back into 130s. Look what happened right here, bounced at 130 and went higher, right? So I'm really getting interested in Lululemon underneath 150 or around 150. I think people can start picking up shares around 150. 130 would be great. And who knows, it may want lower, right? Into the 120s. Okay. That's almost a no brainer as well for Lululemon to recover over the next year or so. Okay. Now, people might have questions, but Lululemon still doing well. It's just the consumer spending obviously has lowered, and there's other competitors in the space, right? You've got Fabletics, you've got the Target's new brand, All in Motion. You've got other places, even Walmart stepping up and having cheaper or more affordable options. Amazon. So Lululemon, it's a brand. Aloe kind of step in the space, but they've got to step it back up, right? But you want to keep your eye on things like this, as it was a $500 plus stock, and now it's at $150, right? So think about your favorite company. If Lululemon leggings were $100 and now they're $10, right? Think about it like that. You would probably pick some up. So Lululemon, keep your eye on it. That's another one that I'm watching over the next couple of months into the holiday spending time. All right. UPS is another one here that looks really good. You can see it's down here. I know, some of these, they might have, a little bit more of a, and this at the time of this recording. So if you're watching this later, you can look back and see if some of this stuff happened. It's gotten really interesting around $80. Okay. Around $80, buyers start stepping in, pushed it back up to 96 and push it all the way back up to $197. All right. So there we go. These other tools, a Fibonacci extension is another thing that I use. So I will end off with that, because you're like, Fibonacci, who? You're losing me. Okay. So I want to go back to Centene. And this is the last kind of indicator, right? I have a MACD as well that I use. Okay. So I'll end off with those two. A Fibonacci extension or a Fibonacci retracement is a tool that's used to see where buyers are present. It was created by Fibonacci. Okay. It's some algorithms. It's some equations. I'm not going to go on to, but I want to click Fibonacci retracement. Okay. On a monthly time frame. And I'm going to drag it from the top down to the bottom where that support is that I like. Okay. And you see it presents some numbers, right? And percentages, levels and percentages. So I want you to watch what happened at these levels and percentages. Buyers get interested when Fibonacci starts entering what we call the golden pocket zone. Okay. That is between 23.6% and 38.2%. Okay. Look what happened last time it got into that zone. It bounced off of it here. Then it got into the zone and just took off. Came back, held this previous high in the zone. Buyer stepped up heavily again. So that's why I have a target first of around $40. It gets past $41 or $42. That's where the steam is going to start picking up. Okay. So that's another tool that we can use to see where it's headed, and also where big money buyers might start adding heavily to their position. Okay. Where it starts having to take off. Okay. Let's look at a MACD. A MACD serves right underneath the RSI, and it's this yellow line here. Okay. So a MACD, when it starts curling back above the signal, right? When it starts curling here, and I'll show you what it looks like in a second, that's when buyers start heavily stepping up. So you see it's oversold. Once that MACD starts curling on a monthly time frame, that's when you'll see what in the world's happened to Centene. It's all the way back up here, right? Look at the weekly time frame. You see how it starts curling on a weekly? When it crosses, that's when the big move happens. Okay. When it starts crossing on your time frame, look what happened here. See where it crossed on a daily? What happened after it crossed? took off. All right. See how it's holding above a daily. So the weekly is about to cross. So we should get another big move over the next couple of weeks. Okay. So if you need support on this, if you're understanding it a little bit better, please give me a like and subscribe. Share this out with anybody. Also, if you have any questions, please put them down below. I'll see if I can make another video. But the best way to learn is to watch this over again, practice it with yourself. And also, I'll just be frank with you, join the community so you don't have to do as much work, right? There's a 3-day trial link down below. There should be a small little 10% discount code that pops up for you. We'd love to have you inside the community, inside of Leverage University, to trade with us and also just invest long-term if you're more of a risk-averse long-term investor, but you want to include Leap options into your strategy. All right. Without further ado, thank y'all so much for this training video and staying on with me. Until next time, peace, love, and blessings.